Maybe you have some money on the sidelines and you're wondering whether you should pay off your mortgage. I actually get this question a lot from both prospects and from clients. In fact, I had a meeting last week with both a prospect and client who were in this specific situation. I'll talk a little bit about it and what they were looking at. So they had between $100,000 and $200,000 in cash that was sitting on the sidelines, and they were wondering, should I just take this money and pay off my mortgage? And what I tell clients often is I'm the CFO. I mean, I'm going to look, I'm going to do the analysis. I'm going to tell you what my advice is, but you're the CEO and you can trump that at any point. And what do I mean by that? Well, from a financial standpoint, it's really not that difficult of a decision, but what happens and what makes it difficult is the emotional side of things. So there's three different types of people out there when it comes to paying off debt. There's people who have the wherewithal or the ability to pay their debt off, and they do so. And then there's the people who have the ability to pay off their debt and they don't, for whatever reason. And then there's people who don't have the ability to pay the debt off and they don't pay the debt off, obviously, right? Most of the people that I work with have the ability to pay the debt off and they pay it off regularly. And they do that because they don't want to owe money to anybody. They feel a burden by owing that money to somebody. And so they feel like, I just want to get out from underneath this mortgage. But from the math standpoint and from a financial planning standpoint, here's what you want to look at. You want to look at what's your interest rate on your mortgage? What is the term or length of that mortgage? And do you get tax deductibility on that mortgage? Okay. So let's use the example of say like a 3% mortgage just because it's easy to work with, a 30-year term. And then the tax deductibility or the after-tax rate of return is going to be like 2%. Okay. So the question you have to ask yourself is, are you going to be getting or can you get with your money greater than 2%? Because that's what you're paying for the mortgage over the next 30 years. And if the answer to that is yes, which is not really that hard if you're a decent investor, then you should use that money and invest it and you'll get a better rate of return and then more money will be going in your bank account. So, but like I said, what trumps all of that is, if my client or my client's spouse is sitting there saying, you know what, I just feel like I want to pay this thing off because I don't want to have any debt anymore. Can't really argue with that. So anyway, that's my 2 cents. Not a recommendation for anybody's specific situation. If you do want to talk about that with your certified financial planner or your CPA before making your specific decision, that would be recommended. So take care. Bye-bye.